Hi guys, Dan Bell here at Squirrel doing the mortgage update while JB is away. Now in terms of what's happening with interest rates and mortgage rates in New Zealand over the last week, not a lot has actually changed. We had the fourth quarter GDP announcement last week, which showed that the New Zealand economy is indeed in a recession, and I'm sure everyone would agree that we're all feeling a bit more of the pain of higher mortgage rates in the economy. Now, in terms of the best rates that we're seeing in the market and the best terms to fix, we are still favouring 6 and 12 months. Now, the best rates that we're seeing in those terms are around 6.89 and 6.85. Now, bear in mind those are special negotiated rates, so you do need to have a certain amount of equity to get those, but it certainly pays to speak to your mortgage advisor and see if those rates are available. Further out in the interest rate curve, we are seeing rates a little bit lower, but because we think interest rates are actually going to fall by the second half of this year, we're not actually advising that people lock in those longer term rates. Now, obviously speak to your mortgage advisor for more personalised advice, but we do think that mortgage rates will continue to trend lower this year. Most of the market actually expect interest rates to start coming down by at least November. And in fact, the financial markets are predicting that the OCR will be cut in August this year. So fingers crossed, we see that obviously come through. In terms of economic news and data this week, really not much to report this week. Big news next week with the Reserve Bank decision on Wednesday. They're not expected to change the OCR, but obviously we'll be watching very closely for any change in their language and the tone around where they think interest rates will be going in the near future. So stay tuned for that and we'll catch up next week.